I'm just gonna leave it Chosh. And step 3, FVG for entry. Okay? It's simple as that, right? But it's so powerful in what? In the sense that it utilizes the way the algorithm books and delivers price. Okay, the algorithm does 3 things. Okay, it runs to liquidity, it runs to rebalance to equilibrium, and it runs to rebalance to imbalances such as FVG. These FVGs, these big imbalances. It does these 3 things. It does nothing else. Okay, all it does is these things. Okay, so this is basically. Let me just bring it up a little bit. This is basically our setup, okay? So what do I mean by super previous session low or high? So suppose we are here in London, okay? Tomorrow in the morning, everybody was going short. Some people were not shorting here, so they had a little bit of drawdown all the way before they got the big move, right? It's about 1 to 2K of drawdown, right? With at least for those lengths. But basically, yeah. So suppose you open your chart. You open your chart in the morning or whatever time in the day, and whatever session you are right now in. Let's say we're in London, right? You open a chart somewhere around here. Great. We're in London. Now, step 1 is what? Sweep of previous session high or low, right? So we wait for a sweep of the previous session. What is our previous session? Asia, right? We're in London, so our previous session is Asia. If we're in New York AM, then our previous session becomes London. If we're in New York PM, then our previous session becomes New York AM, right? Just one before. So first step, we're in London, so our previous session is Asia. So we wait for a sweep. What do I mean by sweep? I mean just price raiding that. Give me a second. Yeah, just trading or just wicking it. Even a wick is enough. Above the previous session high. This is the session high, session low, high, low, high, low, high, low. Okay. So here, right there, on this candle right there, this one right here, we wicked above previous session high. Okay. Above previous session highs and lows, there's liquidity. People who are longing or shorting, they would have their stop losses below these session highs and lows. Why? Because it's textbook, right? All of us learned that. Just put your stop loss in the nearest swing low, for example, right? Nobody put their stop loss in blank space, right? That would just give you some unnecessary risk that you just shouldn't be there, right? Everybody just puts their stop loss at least below swing point. Nobody puts it in the middle of a candle, right? Anyway, so as soon as this candle went up, we just swept anybody that's been shorting since Asia has been stopped out right there. Okay, so this first step is done. This gives us the liquidity. Now market now done its objective. Now it can do one of the other 2, right? Now it can reverse. It can start to reverse. So this gives us a 25% chance that the market is likely to reverse. Just 25% chance. But if you're probability, if you're trading, you don't want 25% probability in your trading. You want more than that, right? At least 50 to 60, 50 and above. So that's where the chosh comes in. The chosh means change of character of the market. So let's say we were bullish we were bullish. Once we get the chosh, it means the market is hinting itself, it's tipping its toes that it starts to want to reverse, right? And usually these choshes and shifting market structures are very hard to do and requires sponsorship by institutions, right? To move the price like this. This here is like retail movement. Breaking a swing low or swing high requires a lot of energy, a lot of, some big buyers, such as institutions, right? So that gives us, once we get the chosh, that gives us another 25% chance. So where is the chosh? Well, you can go ahead and turn on. Settings, plug it up. All right. I have the link for this, so you can download it for free. But yeah, so you just go ahead and since we went above previous session high, we're looking for shorts, right? We're looking for shorts. Once we go below the session low, we look for longs only. Okay, nothing. Even if you get into a late entry, you will have to take only longs, right? I'll explain the reasoning behind it later a bit. So step 1, sweep of previous session high, done. Step 2, chosh. We wait for a chosh, right? You can put an alert and it will alert you automatically once this step happens. For example, right here, I have alerts that says sweep. We did sweep previous session. And MSS, which is also the same, just a synonym for the chosh, and FVG for our entry. Okay, so step 1, previous session, high has been swept. Nice, now wait for a chosh. 2, we got chosh right there. Excellent. Break of these lows, we broke it very strongly, very displaced. Excellent, something you want to see. These kind of moves are usually sponsored by institutions, right? But we still don't enter. We wait for FVG. Why do you wait for FVG? Because this displacement here, after a big movement, the market likely to retrace, right, into the imbalance it left behind, right? So if you enter around here, you're gonna have some of these here. You're gonna have some of these here on you, right? It's gonna go your way and then starting to get scary for you. So we wait for an FVG. An FVG is an imbalance, right? It's only made by institutions. It requires a lot of contracts that go into the market to push that, to leave an imbalance, to leave like something behind, right? So this FVG gives us some sort of institutional or sponsorship that will protect our position. So here we go. Step 1, step 2, charge, step 3, FVG. FVG is right here. If I go into replay mode, you'll see that this FVG will be automatically printed out for you. So if I go like this, I don't like replay, but I'm just going to show you that. If I delete this, it's going to draw for you automatically the FVGs, right? But once we go above them, they get immediately deleted. But during your time of trade, you will see them on your chart. Okay, so now let me get out of replay. 1 second, okay. Just make sure I'm either pressing my screen. Okay. Yeah, so step 3, FVG. This is the FVG, right? Here is where we enter. I'm manually drawing it. Here is where you enter, right there, at the touch of this FVG, right here. And you put your stop loss at the previous session high, okay? And what do you target? You target previous session low. That is your maximum TP, not your only TP, your maximum TP, right there, previous session low, which is in our case, again, Asian session low, right? Oops, just like that. You entered here, you had maybe about $50 of drawdown, and then boom, almost 200 ticks. Okay? 200 ticks is 500, 1K, right? 1K trade with a single contract, right? And of course, the market went much, much more. It went all the way up to 350. If you want to hold further, it's up to you. But at this point, you should be closing 90% of your trade at least, okay? Of course, you can take a TP at these swing lows, partials, just like that, okay? Now, that is how you can catch this whole move. And you don't have to be in this ranging market where it goes your direction, then goes against you, and then goes your direction, then goes against you. You're already a few steps before the market actually does its move, right? Because why? Because the market is now trying to do what it's done. It took its liquidity, it has this institution sponsorship behind it, and now it can run to its other targets. Just like that, okay? Now, and this is not just for today. We can go as many days back. In fact, we'll go back to yesterday. We'll show you the same exact thing. Right, same thing now for the longs. Let's have a look for the longs. The longs, same thing right here. Okay, first we wait for a previous session to be swept. So let's say you open New York AM, right? Or we just closed London right there. Here, right there. Boom, 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 boom. The market went down in New York AM. It swept previous session low. What is our previous session this time? It's London, right? How long is it? It's London. So we swept it with discount right there. Done. That does not mean we enter. If you want to enter there, that's called a turtle soup inside ICT concept. And more times than not, you might get it wrong. So it's just too stressful, right? Just wait for the confirmation. What's our confirmation? Charge. Okay. Once we get the charge, that is when we will wait for FVG and we'll enter there. Okay. So now go ahead and turn our indicator on. There we go. A few minutes later, about 10 to 15 minutes later, we got our charge right there. Okay. Does that mean we enter there? No. Why? Because, like I said, the market will most likely retrace of this big movement into an FVG, right? What's our third step? FVG. FVG is right there. We enter inside the FVG. You will just save yourself some heat, right? Unnecessary. You'll be up in like really happy. Oh, let's go. And then instantly you just go down. What? Just wait for the price to come back to you. It will come back to you if because the market took its liquidity and now it has this institutional sponsorship. It left a gap behind. The market has to be equal and to have to deliver both up and down. That's where the market comes back down. You will find your entry here, anywhere inside this FVG. I'll put it exactly at the top of the FVG. As soon as it touches it, I have my limit order on. And we did share these trades today live on the chat. So you can go ahead and scroll up and you'll see us sharing it live. So it's not a hindsight. We took these live, guys. And you'll enter right there. You put your stop loss at the lows, okay? It's 100 ticks. That will be about $500 stop loss. Of course, you can go with micros. So if you cannot handle that, you can go with 5 micros. So you're risking $250. That is normal, okay? I went in with 2 contracts. I think I was risking about 2K, no 1K. And of course, I got out much earlier, around here. Sorry, around this right there for 190 ticks. But you can hold it until previous session high. That is your maximum target, right? You enter here, your maximum target is here. It is not your only target. You can take partials every single swing high. For example, or just take you want looking for 200, $300 trade, you will just take 300 and get out the trade, okay? That's it. Do this consistent every single day. 300 a day is great, okay? But essentially, you can be holding all the way up to previous session high. That is your ultimate target, okay? How much ticks is that? 355 ticks, okay? It's 3.5 RR. This trade alone would cost your account, okay? With single contract. And of course, the market went much, much higher. And we can anticipate how much further it can go, right? We can anticipate how much further it can go. For example, almost to the tick. So let's have a look. It should be about 1 standard deviation. So it went up to 1 standard deviation to the tick. Look at the bodies. Forget the wicks. Look at the bodies. All the bodies are respecting this 1 standard deviation. This could be your target. And then your last partials can be at London high. Okay? Just like that. Likewise, yeah. So here is beautiful, beautiful trades that we took live today, and it was just beautiful. Now let's go back a day, for example. Let's go, and this works on every asset, not just NQ. I'll show you on ES, CL, GC. We had beautiful targets today. We posted all of them actually. It was a beautiful day. So let's go back to yesterday. Same thing here. Let's turn off our indicators and start. Let's say we open in New York AM. Okay. What did we do in New York AM? New York AM, we put premium session high. Okay, great. That's our step 1. Step 2, charge. Okay. Step 3, FPG. Okay. There we go. So let's go ahead. We're looking for shorts. Let's turn our shorts indicator on. And you see that we set premium session high. That was step 2. Step 1, step 2, charge. Great. FPG, our FPG is right there. You put your entry right there inside this FPG. Right. Okay, this one is a bit scary about here. And you put your stop loss at previous session high. And you target previous session low, just like that. Okay? Market went up, very close. It didn't stop us out. It was very close. And then, of course, it went up. It went all the way down. And, of course, much more, up to 500 points, right? Let's say you missed out on this trade, right? No problem. You would enter at this FPG. You missed out on this one. This last one right there is even better confirmation, right there. You can enter on this one as well. So as soon as if you miss out a trade, it offers you multiple entries, and the stop loss is exactly the same. The only difference here is that here we have zero drawdown. We entered exactly where the market started to reverse. Stop loss is the same stop loss at this session high, and you can target your premium session low. That's it. 266 picks again, and we want all the way much more, about 600 picks. Okay, with ease of mind, all right? So just like that. Now let's go on to, for example, ES. ES, we have the same exact thing. Where is it? Let's go. So here, let's say you're New York AM. We're looking for longs. We start premium session low here. Oh, Luke, we got a chosh here. Why are you missing that out? Why are you cherry picking? I'm not cherry picking. This chosh right here, we didn't do step 1 yet. Step 1 is to go below premium session low. Here, did we go below it? No. We first go below the session low, then we get the chosh. Here we go chosh before the sweep. Okay, before step 1. So we wait. This one is invalid. We wait for the sweep of premium session low. We got there. Okay, now we start premium session low right there. Great. Now we wait for chosh. We got chosh right there also. And then you find your trade, and then of course this trade is still running, and essentially we'll go to your previous session high, which is London, which is your maximum QP, right? We took an entry here on this FCG, not this one, because it just ran before us without us, and I aimed for 300 buck trade, and I took it about 5 handles, and that's it. And now we're still continuing, right? Now let's go to TL. Okay? Some people like commodities. I think pull-up loves commodities. Same thing here. What we in New York AM, what did we do? Premium session high has been swept. Step 2, we're looking for a charge, FPG, you enter, and now you'll ride all the way to premium session low. Of course, this move from here to here is $700, right, with a single contract. Size price, okay? With 2 contracts, you can double it. And your stop loss would only be literally 270 bucks. 12. Let's have a look at gold. Gold, same thing here. We have a sweep win on New York AM. We swept premium session high. That's step 1. Step 2, short. We got short right there. Nice. Step 3, FPG, you enter there, and you ride it all the way to premium session low, just like that. So I just wanted to show you this, guys. It's simple. We have our a link to the indicator setup. So all you have to do is just click. I send the link in there. You just click save. You don't have to set up any of the things. It's already set for you and it's free. It's been consistent for 10 months, and it gives you the best entries and the best exits and the whole move every single time, right? We showed it today. We showed it yesterday. Even here. So here we start premium session low, premium session high, Tosh, FCG. Here we got a Chosh and a Fiji, but however, the price didn't come back to the FPG. It just ran without us, right? It ran without us. So no entry here because we didn't get filled. But just like that, yeah. Here's same thing. New PM. Well, that's great. We set previous session low. Nice. We're looking for long short. This was FOMC. So you can predict that the market will FOMC, even though you shouldn't be trading the news at all, only after the news. You can still predict that the market wants to go up. Why? Because we set all the liquidity of the previous session. We have a Chosh, FEG. The market went down. I told you guys, at FOMC, we do not trade the first move at the drop because that's a fake move. Exactly 30 minutes later, the market will do its real thing. The market dropped exactly to 30 minutes. Look at the time, 14:30. We entered, I told you, we entered at this FPG, bullish FPG, so sweep, short FPG. We entered here, and let me show you guys. From here, zero drawdown, maybe, well, about 50 ticks drawdown, but you were able to make 1,000 ticks, and of course, nobody would help all the way up there, but essentially you can. 1,000 ticks, guys. Okay? But where would you be heading? You would be entering here and getting out a previous session high, which is the new AM high, which is 169 ticks, and that you should be content with it. Okay? Yeah. So just about that. That's all I wanted to share, guys. Just use it. Even if you have a great strategy, use this. Incorporate. At least incorporate the previous session lows or previous session highs into your trading, because then it will give you a bias, right? Even though we bullish or bias, so our daily bias is bullish or bearish, I don't care. We in the same day, we took a short and we took a long. And we didn't take a 10 to 20 point move. We took the whole move all the way down and the whole move all the way up. And it's still going up. Probably to this FEG, we'll have a total soup all the way back down to its areas as is. But that's a completely different story. So it's very similar results to the trading that, what's his name? Ozank gives. But it requires not a single manual intervention, right? You will get your alert. Once you get your alert, you go on your chart. Oh, nice. We've got sweep, Chosh, FEG. I want to take this trade. Is my stop loss allows me to take this trade? Yes, it does. Nice. You take the trade. Oh, you might get the Chosh somewhere around here. With your stop loss all the way here, it's going to be a big stop loss. You're going to be like, great setup, but my stop loss can't handle this, so I'll wait for the next setup. And you can put it on NQs, gold, CL, crude oil, ES, nat gas, whatever, up to even Forex. And it works great even Forex and even crypto. So just incorporate this. It's very simple steps, and it's not a step. It's not an indicator. It's how the market books, right? The market, the financial market, the fate of the financial market is not going to be left into buying and selling pressure. It's based on an algorithm because it's the fate of the financial market, right? And this algorithm, even though it's manipulative and it's like controlled, it's written by humans. So these humans are prone to make mistakes or leave something behind. They cannot hide everything. Not everything. They can hide like 70% of the things, but some things are viewable to everybody, such as these FEGs, the previous session lows and highs. So utilize this, take advantage of it, exploit these things to your advantage, right? Even if you trade MAs and EMAs and MACDs and stuff, once you sweep the previous session low, you should be looking for long. So if your MA or your own strategy or your buy signal indicator pops up on your chart, then you can be confident that this trade will now become 1,000% much more valid than it would have if you didn't sweep this previous session low, right? Yeah. So I hope this was useful, guys. See if someone wrote something. Exactly, it's automatable. Like we're building something that will just do it for you. But right now, the alerts itself is enough. Look, today we got CL, NQ, ES, CL, and Dixie. This is today, right? Yeah, today. Dixie, NQ, NG, Dixie. This was just today, right? These are all potential setups. It's not once a week or once a day or once a month kind of trades. You got 1, 2, 3, 4, 5, 6, 7, 8, up to 10 trades a day. You pick which one you want and you take it. And they all print great, you saw, from top to bottom. Yeah, so if you guys enjoy it, please use it. It's very consistent, very nice. Give it a shot and let me know. So now I'm done with my little presentation. If anybody want to speak, you can go ahead and speak. If you have something to share, you can go ahead and share. If you have questions, you go ahead and share. Question us. But pretty much that's it, right? You can write in this chat here in general. You're welcome, Roman. You're welcome, Sinan. You're welcome, Jessica, Mia. That's enough. Thanks, guys. Use it. Or just incorporate into your strategy. You will see big difference. Big, like 1,000% difference. Thanks, brother. Thanks, brother. Thanks, brother. Hope you guys enjoyed. Unfinished was gonna show something. Yeah, pretty much. If you guys got a question, you can type in our chat, right? We have beautiful analysts. If you guys are new, you can see we have a lot of analysts. Where are they? Here, Ozink is leading the analysts right now. P. Jones with his beautiful levels, like every level P. Jones says, it goes there. Any setup Ozink sends, it goes to TP. Ashanti gives the best RR kind of trades, like up to 10k kind of trades. Xavier as well. Zach's also a maniac in making 10ks and like on the phone. He incorporates the into this good way to hold it. Exactly. You're welcome, Hamza. You're welcome. Go on, Charlie. Yeah, for example, right now, where are we? ES swept. Right now, look, we swept premium session highs, right? Now we wait for a Chosh and a Fusion to go down, right? Same thing with ES. Plan it, wait for it. Here we've set premium session high, right there. Now we wait for a Chosh. We don't enter here. There's some people that enter like that, and they have really good edge. But you can wait for your Chosh, like this one, FPG to enter it. That FPG will protect you from going much up against your position, and you can write it down up to what? To the swing lows, or the premium session high. It's premium session low, which is your maximum optimal, ultimate terminus where you should be closing your trade. Anything longer than that it becomes out of bound, right? Okay, so that is about E. Like let's say you guys trade so if you trade crypto. I don't know, I haven't checked crypto in ages, but similar thing here. London, what did we do? We went for a Chosh. We have speed premium session high. Chosh, FPG. You would enter exactly right there, zero drawdown on crypto. Where did it come? Right on this FPG, right here. Stop loss at the high. Right. This is crypto, guys, but it's not supposed to work. It does. When you target premium session low and boom, that is your 3.5 RR and boom. Look how much far they went down. You see? 10 RR. Same thing here right now. We just in New York, we just swept premium session low, charged FPG. We entered at the FPG, and now the market is already gave us a beautiful almost 2%, 1.6% move, right? With times 10 leverage, with times 20 leverage. Some people go times 100 and times 200 leverage. I know you guys do. That is your move already. Okay. Euro USD for Forex. This is futures. So Asia, previous session high swept, Chosh, FPG. You entered exactly at this FPG right there. It's printed out for you already. And boom. This is Forex, guys. I don't like Forex, but and you target previous session low. I don't care how much more further it goes down. I don't care. It's beyond my pay grade. I'm just taking things here. It's already a 3-hour trade. I'm done. Of course, it went way much more, right? But we don't know. It might come here and reverse, right? But we took our money right here. Previous session low. Simple as that. Okay. Here, what did we do? Previous session low has been swept. We had a charge here. Unfortunately, this one didn't work out, but this one did. Next time, we'll go for more risk. Oh my god, sound bad. So here you would have had a little bit of stop loss, right? Which is about 0.006, 14. I don't know what you guys call in Forex pips, but here you would have entered your trade here. Again, sweep, Josh, you enter the next one. So You'll enter your entry right there, and then you're just already going. Okay. So it works in everything. It has a really nice consistency. It's, the good thing about it is easy. Like you don't have to watch that chart. Oh, okay, we just pumping. Shall I go in? Shall I go for him? You wait for the setup for you. Just like that. And it will deliver to you a big amount of trade. Will you show something guys to teach your concept content? Show automate, go ahead. Explain last steps, FEG, please. Are you still here? Sol, yeah. Jones, yo. Hold on. Jones, I muted you, brother. I'm sorry, but there's a lot of play going on. I'll mute in a minute. So what do you mean by last step FEG? Last step FEG. FEG is an imbalance. You see these big pumps? You can draw them manually. When you see a big pump, big dump, big pump, here is only sellers. There's no buyers. So the market would like to go up, give offer buying to these people here, and the market goes down, right? Same thing here. Market went up so fast, it left a gap behind in terms of FEG, okay? Fair value gap. The reason, so it was so fast, it only offered buyers. It didn't offer any sellers. So that's not a healthy market. A market is buying and selling. So to get a market, you have to have a buyer and a seller, right? A seller and a buyer. So we only offered buyers. So the market, to be efficient, it has to allow sellers as well. So the market goes down, it offers. Now this area here is balanced. This area here is now balanced. Price doesn't even have to come back to this low anymore because we offered both buyers and sellers to this area. So it doesn't have to go anything below. Anyway, we don't really regard that thing. That's called balanced pricing, and it's a different concept. But you just enter anywhere inside this FEG. Even the midpoint of this FEG is a very important place, okay? You can enter at the start of this FEG and you can write down. Similar thing here, these are big FEGs. And these FEGs are not made by retails. Retails, even if the whole world starts to buying, it will not form this FEG. It will form something like this. This is a signature of that big buyers going in, right? Institution level. Deep pockets people, right? So in other words, institutional sponsorship. So if you want to be going long, you will have institution sponsorship supporting or sponsoring your long. So they're not going to go against their position and go to the low. It won't. Look, it tried once, twice, we didn't. And unlike supply and demand, this here, once we close below it, it doesn't matter. Once the price goes back above it, we still use this as a bullish FEG. So even if you didn't enter here, on the next try, you can be entering. Even if we dump all the way down, come back up, you can still be buying now. Okay? I hope I answered that for you. Yeah, you can hold it. You can enter a trade and you can hold it the whole day. But most of the time, it doesn't take a whole day. Here, from here, you entered here. It took you. Hold on. You entered here and you got out. Approving session. It took you. Oh my God. About 40 minutes. I don't know. Really bad, but from here, about 5 candles, 5, 10, 15, 20, about 40 minutes to hit your target with zero drawdown. Of course, it can be faster. So here we entered here, it proved immediately in the next 5 minutes, pumped to my target. It took me 10 minutes to make 170 ticks, right? Of course, if you want to hold the whole day, you can. You can leave it a hold. You can imagine that this low here is protected. The market has no reason to come back down here. If it goes back down here and takes out this low, it's not going to be a sweep hunt. It's going to probably be a full-blown reversal downwards. It's going to go down, take out any other levels there is. And we do this on the 5 minute, right? And since we're using these session lows and highs, every session is about from 12 to 8. So it's 8 hours long, right? So you can think of it like you are on a high time frame, 8-hour time frame, right? Nobody goes on 8 hours. Most people go to a 1 hour, 4 hour, etc. 8-hour time frame is your bias. So here we swap 8 hours of anybody that's trying to go long. Here we swap 8 hours of anybody trying to go short. Yeah? Just like that. Sorry about switch to my phone. It's okay, John. I'm sorry about that. Sorry about that. Okay, here's nothing like that. Something I use quite nice. This is also very good. You sweep a previous session internal liquidity, and you enter the IFG. This is why I enter. This is the strategy I use on my 15 seconds. So we sweep a level, internal level. This bearish FVG. Once we close above it, we use it as inverse. So bearish should be resistance. We're using it as support. Bearish times support. Support times resistance. Resistance times support. We enter here, and the market goes up. This is what I do on the 15 seconds. Ultimate line zone based on those that red blue cross would be decent entry. Holy shit, but they have a lot of stuff on there. I don't know what I'm looking at right now. But here, for example, here, previous session, Asia, we in London. Previous session is Asia. You go above it. This is manual application. Today, what's his name? Ozeng said this move here is manipulation of the Asian high. We just a manipulation. That is indeed manipulation. What are we doing actually? We're manipulating previous session highs and lows. We're sweeping it. And then we go down, FVG, here's break of started chart. You can enter right here. Or here we got another chart right there. It's printed for you automatically. You enter at this FVG and you write it down. Done, one trade. Even though you get up to 10 trades a day, take one trade and it will print you as much money. You can go like Ozek, you can go in 5 contracts, 10 contracts, and you can be making 10K, 20K. I don't have the guts to do that. I'm fine with making a K to 2K then on like each account. Cross would be legit. Yeah, cross would be legit. Any other questions, guys? Oh, some people might be writing. You're welcome. Hold up. Hold on, already did. So, any more questions, guys, before I leave you guys to stop? All right, awesome, guys. Hope you guys enjoyed, and see you guys later. Peace.
Thanks.